It's interesting to me, you have bought more of a stock that's down a lot year to date rather than thrown in the towel like Amy's done on a couple of her names. It's Lamb Weston. It's down 20+% year to date. You bought that.
We did. And Lamb Weston is a very interesting story. They sell the French fries that go to the McDonald's or you buy them in grocery stores. They've had a couple of things happen. One is the GLP issue that in the short term we think is more noise. And the second one is they're implementing an ERP system. And historically, when companies do ERP systems, you have a couple quarters where things are not as well executed. It's a great business. It's 12 times earnings, high cash flow, good dividend growing, and at 20% down, it's a high quality company that we want to own.
We're speaking of, healthcare related things. You bought more Vertex and Novartis.
Yep. We like both of those names a lot. Vertex we've owned for a long time. We trimmed it earlier in the year. It underperformed for a little while, but we like the new Alpine acquisition. We think they have a lot of shots on goal. Obviously, the holy grail will be for their pain medicine, which we won't find out till next year, but we think they have some catalysts between now and then.
What about Novartis?
Novartis is also has underperformed for a little while. We think the company, they had a really good earnings report. They're focused on shareholder returns and returning and streamlining the business. So we think they have some patent expiration issues coming up, but they're still sort of 13, 14 times, and we think the company can get through them.
The other thing to watch for in pharma is so much of the capital has gone to Eli Lilly and to Novo. So if some of these other companies can execute, I think you get a lot more capital coming at a much cheaper valuation. It's really it's going to become that big four in the tech, like the big two in pharma. And if some of the others can actually execute, you'll see some capital.
Well, because all the capital's been going towards GLP-1. Right. It's been hard for anything else to sort of raise its hand and say, hey, take a look at us. Yeah. We're, developing some potentially life-changing drugs as well. But that's where the story has been.
And it used to be you get credit at phase 2 coming into phase 3. Now you don't get credit until you actually get the approval going out.
Yeah, the risk sort of curve is.
It has a big pain drug, non-opioid pain medicine that could be huge.
Right, and you want to buy it now if it happens, not when it gets approved, because the stock will reflect.
Farmer Jim, you sold a REIT, Camden Property Trust.
It's my only REIT. I'm not too enthusiastic about REITs, but Camden Property in particular, Scott, it's an apartment REIT. So I hate having intellectual conflicts. We're all sitting here hoping for inflation to come down, and one of the major components that's going to make that happen is apartment rents coming down. Well, I can't be hoping for that on the macro level and still own Camden Properties, hoping that their rents go up. That just doesn't make sense. What'd you say, Josh?
It's a hedge.
Okay, fine. To me, I hear you. To me, it's a conflict. The other thing is I'm just not passionate about it. Like, I don't, Josh, you said something really interesting a second ago about these companies out there that are not executing. And as you were saying that, I was thinking to myself, and there's a lot of other companies that are executing. And I want to focus on those. There's so many stocks in my portfolio right now that are doing well. Camden Properties, I've held it for 3 years. I've gotten the dividend, nothing else. I'm not excited. I don't wake up in the morning excited about it the way I do about Delta or General Motors or Citigroup or JP Morgan. So I'm damning it with faint praise.
I like what Josh said, though. It's a hedge. Like, why don't you look at it more like that, where, you obviously seem reasonably unemotional about it, where like a Weiss, for example, reminds me yesterday of, he owns a lot of the mega cap tech, but he sold the Qs just as a hedge, nothing more.
Yeah, I heard him. I thought it was a good argument. I can't. I'm not excited. Do you hear the lack of excitement about Camden Property Trust? I mean, I don't know. I want to be exciting on the show. Give me something else.
Is anybody that excited about a position that's just merely used as a hedge against a long in other areas?
If I'm wrong and I should have it as a hedge, that's a mistake I'm willing to take. I mean this like seriously. I'm not being snarky at all. I actually think the economy is doing very well. I think inflation will be coming down, and all these other things, these Citigroups, these Wins, these General Motors, they're going to do just fine. Okay, I don't have the hedge right now. That money's sitting in cash.
Okay,
sitting in cash. I've got things that I can do with that cash if I feel like my tune on the economy changes.